Dear students, welcome back. So in the previous video, you have learned about the material theory part. So today also I have a bit theory part which I am supposed to cover. So that I am going to cover in this video. So then I am going to start up the problem part. Okay, so let us, I think in the last video we have learned that factors should be considered in fixing the maximum level. So today I am going to teach you all about the factors to be considered while fixing the minimum level. Okay, so minimum level means I have told you already. So this is the lowest level which keeps our production in safest mode. Okay, so below this we will have immediately a danger level. Okay, so now what are the factors we should consider while fixing the minimum level? So that we are going to learn in this video. Okay, so now let us understand the points. Point number one, consumption per annum. So what exactly we are consuming in a year? Clear? So that we have to consider. Point number two, lead time for procurement. What is the time gap required so to procure that particular materials? So that is also important. Point number three, production requirement. How important is that material for our production? Then minimum quantity that could be advantageously purchased. So if we are getting an advantage by purchasing a minimum quantity, so that point also we should look into. If an item is made to order minimum level is not applicable. So this condition you have to understand. Item is made to order minimum level is not applicable at all in this particular consideration or in this factors. So minimum level, how we are going to calculate? With a simple formula. The formula is minimum level equals reorder level less normal consumption into normal reorder period. So that is minimum level equals reorder level less normal consumption into normal reorder period. So that is what the formula which we use to calculate minimum level. So next let us understand danger level. I've already said that danger level is a level where it goes below the minimum level. So danger level is also called safety stock level. So it is decided by balancing stock out, that is out of stock with the inventory carrying cost. It lies in between minimum level and nil stock, that is complete stock is out, the stock is over. In between that minimum level, then zero stock. So between that we will have a danger level zone. So it is also calculated by applying a simple formula, that is minimum level equals reorder level less normal consumption into normal reorder period, or maximum consumption minus average consumption, which is also multiplied by lead time. So this is how we are going to consider this danger level. Okay, so danger level, it is also, we always said that it is below that particular point where it stock will become a zero, and other point where we have a minimum stock. So the difference clear. So that is where we are going to consider. Next is ordering level. See, this is the level which should be fixed in such a way so that when an indent is placed at the ordering level, so the stock reaches the minimum level just when the replenishment against that indent is received. So the level is based on expected usage, minimum level and the lead time. So by considering all this ordering level, we consider, see, when we are going to place an order. So when we are going to order for the material which is required for the continuous production, so that we have to consider. So while fixing the ordering level, okay, so it is calculated on the basis of the formula, that is ordering level equals minimum level plus consumption during the reorder period, or one more formula is there. So that another formula is ordering level equals maximum consumption into maximum reorder period or lead time. By applying that particular formula, we can identify the ordering level. So next is EOQ, that means economic ordering quantity. So it is a basic issues in inventory control. So it is a basic point under inventory control we consider. So when to order and what quantity to be ordered. So we are going to fix in this level, that is when to order and what quantity to be ordered. So ordering level indicates when to order. EOQ, economic order quantity, indicates what to order. So EOQ is to be fixed in such a way that inventory carrying cost and are minimized ordering cost. So EOQ we are supposed to fix in such a way that that particular ordering cost should be at a minimum level. Clear? So inventory carrying cost, what it is exactly? So inventory carrying cost, it is nothing but the expenses that a firm has to incur to hold raw materials. So to keep that particular raw materials, the company or the firm is going to company has to take care of a few expenditure. So that is what inventory carrying cost we say. So that we can say work in progress and finished the stocks. It includes interest on funds invested, that is in inventory, rent for the storage space. So if we are having a godown to store that particular material, so the rent is also included, and salary, commission, clear, and store department expenditure, store department salaries, and there might be a loss due to pilferage and deterioration, there might be a leakage. So store insurance premiums is also one kind of expenditure, and stationaries for this store is also expenditure, and taxes on inventory carrying, so that is also another expenditure. So all this type of expenditure which are included to keep that particular inventory with us, we exactly call such kind of expenditure as a inventory carrying cost. Okay, so next is ordering cost. So it refers to an expenses that a firm has to incur to place order. So it is in a simple sense, to place an order, what are all the expenditure incurred by your end. So that is what we call it as a ordering cost. So you can say it includes the rent for space used by purchase department, the salaries of purchase department, depreciation of purchasing department. So depreciation which are used, or equipments which are used, assets which are used by a purchasing department, and stationaries for the purchasing department, courier charges, telephone charges. So all those expenditure, even tiniest expenditure which has been incurred by purchase department, so that also comes under this. So that is what we call it as a ordering cost. Clear? So that all incurred in the issue and follow up of order. So we exactly call it as a ordering cost. So if more orders are issued, ordering cost increases, but less inventory cost are incurred. If lesser orders are issued, ordering cost reduces, but a larger inventory has to be carried, increasing inventory carrying cost. So that we should keep in mind, because ordering cost and inventory cost will move vice versa in opposite direction. If one increases, other decreases. If other decreases, and that will increases. Okay. So optimum order quantity, so that minimizes total of both cost, is known as economic order quantity. So to calculate economic order quantity, we have a formula, that is EOQ, that is economic order quantity equals root 2U into P divided by S. So that is U means annual consumption in units, then P means cost of placing an order, and S means annual cost of storage of one particular unit. So these are all we consider while calculating EOQ. Okay, so next is stock valuation. What exactly stock valuation is? See, stock valuation consists of two processes, that is ascertainment of quantities of raw materials and value of that particular material. Clear? So if you take it in a formula, if you look at in the formula, that clearly says, so that is clearly says, that is the formula, that is quantity of raw materials into valuing them on a equitable basis. So next is ascertainment of quantities methods. So physical balance method, Here stock are physically counted and weighted. So in a physically we are going to cross check. Book balance method, this method rely on book balances to determine quantities in stock. Effective if stocks are verified continuously under perpetual inventory. See, very simple thing. If you are relying on books, so it is there must be a continuous verification. So then only you can follow, you can rely on book balance method. So next is theoretical method. This method is used especially to quantify work in progress where physical quantification is not feasible. So when you cannot fees on the physical quantification because it is already in process, the production is already started, then you have to rely on the theoretical method of valuation. Next, ascertainment of value method, that is at cost. Stock are valued at cost price, then at market price. So here stocks are valued at their original market price. If market price is high, so then there result in accounting unrealized profits. So hence not much in practice. So simply if we have bought the material 2 months before and today's price of that material is more, so which will show more profit. Actually in realistic it is not clear. So that is why very less number of people follow this. And at cost or market, whichever is lower. So this is most commonly used method, especially when market price of some stock is less than the market price. So this kind of method we follow. So then how we price the materials, so which we are going to issue. See, material issues are priced using 3 major methods, that is cost price method, average price method, and notional price method. Cost price method, average price method, then notional price method. So we follow 3 types of method. So in that we are going to understand cost price method. So how we are going to calculate and all. So in that cost price method, point 1 clearly says specified price. See, sometimes materials are purchased for a specific job, or issues can be identified with a particular receipt. In such cases, actual purchase price, try to understand, actual purchase price can be applied to issue. This method has a limited application. So within a limitation it has to work. So next is first in first out. So FIFO method, that is first in first out, so which we solve problem on this particular method. So here the principles adopted is price of material received first is applied to issue first. So which I have received first in what price, so we have to make a out first on that particular price only. So we are going to understand that while solving the problem also. Okay, so next is cost price method. Under that specified price method, again the same thing which we have learned. Cost price method, under that we have learned first in first out price method. So the advantages of first in first out method you have to understand. So that is old stocks are used first and inventory consists of current values. So first which I have received, that I am going to out it first, that I am going to give it first, issue first. So automatically the oldest stock will going to eliminate it from the stock. So when the issues takes place, the oldest stocks goes out of the stores. So obviously the current value market value price will be the stock will be in the stock. It is a logical method which we can rely upon, easy to understand and operate. So it is very much easy to understand, very much easy to operate as well, and facilitate inter-firm comparison, so we can compare with the other firms as such. Valuation of inventory and finished stocks is consistent and realistic. So whatever the valuation we do, whether it is a inventory or whether it is a finished stock, so that is always realistic and it is a convenient. So then what should be the disadvantages? The cost of production is not linked to the current prices. Whatever the production cost is there, that cannot be linked to the current prices. If prices are rising, production cost is it is always understated. So that is also you have to understand. Then when many lots are purchased at different prices, calculations become difficult because many purchases are going on. So we have to many prices will come. Pricing of material return is difficult. So when I am sending goods back to that particular supplier, so the pricing will become a problem. Then high inflation creates problem in replacing used materials. Then more than one price has to be used to price a single issue. So many times for the same issue we might depend on multiple prices, so that will create a problem. Then cost comparison between two batches become unrealistic. So one stock which I have purchased in a different period, that might show different price, and which I have purchased in another different period, that might also shows a different prices. So next is last in first out. So this is also we are going to solve under this method. We are going to solve few problems. So materials issues are priced at the latest price of receipt in stock. Hence stocks get valued at old prices. The method fully satisfies the principle of matching cost with the revenue income determination, because it is a last in first out. Which new stock came in, that stock you have to issue first. That is what's the last in first out. Clear? So which came very recently, that has to be issued. So what are the advantages of this LIFO method? That is simple and useful if transactions are few. So if you have a minimum transaction, it is really useful. It is a simple method. Tax burden reduced in inflation as issues priced at higher prices, and matches most current cost with the revenue. Then reveals real income in rising prices. Then minimizes realized inventory gains. So whatever the inventory gains, so that will relieve. So disadvantages, point 1, if prices of receipts vary, method becomes complex. So this method will become most complexity because the prices varies. So more than one price need to be used for a single issue. So many a time, because as per the quantity requirement we have to issue the goods, so then multiple pricing has to be followed. So inter or intra firm comparison becomes unrealistic. So bit complicated to compare with other firms. Stocks need to be adjusted in case of falling price, as cost price can be higher than the market price. So many times we have to adjust the prices also. Unless purchase quantities match sales quantity, revenue not matched with most current cost. So this is also another important disadvantage, because we cannot match the current cost with the revenue. So the company can plan purchases to report a lower or higher income. Then certain accounting standards prohibit use of this kind of methods. So next is average pricing method. So this also we are going to solve a problem under this method also, under that simple average method. Issues are priced at average prices of receipts, ignoring quantities purchased. Clear? So this method can be used when prices are stable. It is calculated by dividing the total rates of materials. New average is calculated after every receipt. Clear? So that is there, and the weighted average is there. So your issues are priced at average price of total quantities and total cost. It is calculated after every receipt by adding the quantity received to the stock in hand and cost of the receipt to the cost of stock in hand. So the total cost is divided by total quantity to arrive the issue price. So advantages of this kind, it is logical and consistent, and changes in prices are evened out. So the values reflect actual cost. So disadvantages, it involves considerable clerical work, because you have to add on every receipt and divide. So you have to add and divide in every receipt and issue. So then when prices change frequently, it is inconvenient, because frequent price changes that will reflect on this particular issue methodology. It is not actual price, hence it is a unrealistic. So it is not on the basis of a real price, actual price. So it cannot be a realistic one. So next is periodic weighted average. So this method is same as weighted average, but here fresh average is calculated periodically and not after each receipt. So we will have a specified duration, 3 months once in a month, twice in a month, like that. So it is calculated by dividing the total value of material purchased during a period by the total quantity purchase. So this is how we calculate. Here also clerical cost are reduced, advantages part, and it is useful in process costing, and short-term price fluctuations do not affect the issue price. So here if you have a short-term price which will fluctuation do not affect the issue price. And disadvantage part of this, heavy clerical work involved at the end of accounting period. So you have to consider which period, which are the stock has to be bought, which we have bought in which period. So everything must be calculated and it must be divided accordingly. Fluctuations in prices are ignored till end of the period. So we ignore the price fluctuation till the accounting period gets over, and closing stock value is inaccurate, and when all stock is consumed, residual value remains. So that is another disadvantage. Next is moving simple average method. In this method, periodic simple average prices are further averaged. Moving average is calculated by dividing periodic average prices by number of periods taken. So it is again one more step ahead of that period. It is essential that period chosen is the one in which materials are used. So next is what is waste. You should know waste comprises of invisible loss and visible loss that cannot be collected and unsaleable portion. So you cannot collect and you cannot sell. So that is exactly we call it as a waste. Clear? So that part of material is exactly called as a waste. So the collected loss, many times further costs have to be incurred to dispose of collected waste. Example, effluents. So that you can take it as a example. Next is scrap. See, scrap represents unusable loss that has a sale value, but you cannot use it. But of course, if you do make a sale, you can earn money out of it. So that is sale value. It is generated from process, obsolescence or defects. Income from sale of scrap is credited to the department generating it, or if value negligible, credited to P&L account. Okay, so next is spoilage. Spoilage is those materials or components which are so damaged in the process that they cannot be repaired or reconditioned. Spoilage can be sold as a second, or if badly spoiled, as a scrap. Okay, so it occurs due to development of defects in the process. So if there is a process defect, so then it will be there. So how to control waste, scrap, spoilage and defects? So which are the steps we follow? So that is determine controllable and uncontrollable losses. We have to have a clarity. Set limits that can be attained. Ensure proper storage, handling, maintenance of inventory levels. Measure and report production, waste, scrap, spoilage and defective regularly. So then compare with the standard and arrange corrective actions. Exercise control at occurrence, recovery, handling, storage and disposals. Okay, so these are the steps. And control at occurrence. So train workers to improve supervision and material handling. So these 3 points. First, train your worker, then improve the supervisor so that they can, supervise in a better manner. Then material handling must be careful. Maintain equipment. So we have to maintain properly. Balance load. So we have to have a balanced load. Then simplify product design, control trials. So whatever the trials we do, that has to be minimized. So then then control defects. So obsolescence and deterioration should be avoided, and arrange strict inspection. So wherever necessary, inspection has to happen so that this kind of wastage scrap can be avoided very easily, and security to avoid theft. So we should have a tight security, so where the theft can be avoided. So next, control at recovery, handling, storage. So collect at point of generation, store with care and minimize damage, theft and misappropriations. So these are all the controls at recovery and handling, storage. Control at disposal, so necessary to maximize returns from sale. So select the best buyer and control the quantities physically. So quantities has to be controlled physically, so then only we can minimize the stock. So I think you have understood what exactly LIFO, what exactly FIFO, and what is averaged method. So these are all the important things which you have to understand before going to the problem. So now I am presenting the format of store ledger account. Kindly look at the image, so which I have displayed here, store ledger account format. So that you have to start up with the name of the materials, then code number of the material if it has been given in the problem, then description of the material, if any description has been given, that has to be mentioned. Obviously maximum level, minimum level, and reordering level, so which I have already taught you. Clear? So then you have to open a table, so which exactly will have 12 columns, which will have a 12 columns. Clear? Which again subdivided into 4 parts. So that is date, receipts, issues, balance. So date is always a separate column. Under receipts you will have a 4 columns, which you have to register in your mind. This table is very important for coming classes. So where we are going to solve the problems of stores ledger account. So in receipt side we will have a 4 columns, that is GRN number, then quantity, then we have a rate, then we have a amount. So in a issue columns we have a MRN, quantity, rate, amount, then in balance we have a quantity, rate, amount. Clear? So you must bear this, so that is where you have to keep it in your mind. So whenever I start the problem, you should draw the table. Clear? Date, receipt, issue, balance. So date is an individual column, and under receipt you will have a 4 column, that is GRN, quantity, rate, amount. GRN, quantity, rate, amount. In issue we will have a 4 columns, that is MRN, quantity, rate, amount, MRN, quantity, rate, amount. And in balance we have 3 columns, quantity, rate, amount, quantity, rate, amount. So learn this table and be prepared. So we will start a problem in the next immediate class. Okay, until then, see you soon. Take care. Bye bye. Stay safe.